We promised a genuine living wage, and we are delivering it. At the budget last year, I increased the national minimum wage and the national living wage, and I am doing the same this year too. Accepting the recommendations of the Low Pay Commission in full and increasing the minimum wage for 18 to 20-year-olds from £10 to £10.85 an hour, and increasing the living wage from £12.21 to £12.71 an hour. Under current plans, the temporary 5p cut to fuel duty that was introduced during the pandemic will come to an end in April, and fuel duty will be uprated in line with inflation. But I know that the cost of travelling to and from work is still too expensive.
Imagine waking up in 2026 to discover that your car, the vehicle you use every day to get to work, drop the kids at school, do the weekly shop, is now going to cost you significantly more to run, not because petrol prices have gone up or insurance has increased, but because Rachel Reeves has decided that millions of drivers need to pay more tax. The Chancellor unveiled a host of new car tax changes in the recent autumn budget that will fundamentally reshape how much British motorists pay, headlined by the Electric Vehicle Excise Duty, which will see electric and hybrid owners charged per mile for the first time. Some drivers may not see their prices change at all, which sounds reassuring until you realize that some could be slapped with expensive costs, particularly if they have highly polluting vehicles, which is government speak for if you drive anything other than the newest, most expensive electric car. Prepare to get hammered. Reeves claimed she was providing support to boost the British car industry and would save more than 1 million motorists £440 a year, which sounds generous until you do the mathematics and realize that for every motorist saving money, there are probably several paying significantly more. This is classic government sleight of hand, where they announce big savings for some people to distract from the fact they are taxing millions of others, and it is about to hit your wallet harder than you might think. Quick favor. If you are absolutely concerned about these new car taxes that could cost you hundreds or even thousands of pounds more per year, hit that subscribe button right now. Over 94% of you watching have not subscribed yet. It is completely free, takes literally 2 seconds, and helps us keep bringing you these stories about tax changes that will directly affect your finances. Cheers if you did. Now back to Rachel Reeves' latest raid on motorists. Let us start with a headline change that has got motoring groups and drivers across the country absolutely up in arms: the Electric Vehicle Excise Duty. For years, electric vehicle owners have enjoyed a significant tax advantage over petrol and diesel drivers. They paid nothing in vehicle excise duty, which was a major incentive to switch to electric and part of the government's strategy to encourage the transition to zero-emission vehicles. But that free ride, quite literally, is coming to an end. From April 2026, electric and hybrid owners will be charged per mile, which represents a fundamental shift in how EVs are taxed and will significantly increase the running cost for anyone who has bought an electric vehicle based on the promise of lower taxation. The per-mile charging system is particularly concerning because it means that the more you drive, the more you pay, which sounds obvious but has significant implications. If you use your electric vehicle for long commutes or for business purposes, your tax bill could be substantial. The government has not yet announced exactly what the per-mile rate will be, which is causing enormous uncertainty and anxiety among EV owners who cannot accurately budget for this new cost. The cynic in you might wonder whether the government is deliberately keeping the rate vague until after the policy is locked in, at which point they will announce a figure that is higher than people were expecting but that they will have to accept because there is no going back. The Chancellor confirmed in the autumn budget that vehicle excise duty for cars, vans, and motorcycles will be changing across the board, not just for electric vehicles. From April 1st, 2026, the government will uprate tax rates for these vehicles in line with the retail price index. Now, uprating with inflation sounds reasonable and even fair until you remember that wages are not keeping pace with inflation for many people, which means this tax increase represents a real terms reduction in disposable income. You will be paying more for your VED while potentially not owning proportionally more, which squeezes household budgets and makes life more expensive for working families. The line that some drivers may not see their prices change at all is doing an enormous amount of work in the government's messaging because it is technically true while being practically misleading. Yes, if you happen to drive a vehicle that sits at exactly the right point in the emission scale, and you do not cross any of the thresholds that trigger higher rates, your VED might stay the same. But for the vast majority of drivers, particularly those with older vehicles or anything that emits significant CO2, costs are going up potentially substantially. The phrase particularly if they have highly polluting vehicles is government code for if you drive a diesel or petrol car that is not brand new, you are going to get absolutely hammered with higher taxes. From April, the government will increase the expensive car supplement threshold to £50,000 for zero-emission vehicles only. This will apply to any zero-emission vehicles, including electric and hydrogen fuel cell cars, registered after April 1st, 2025. Now, this change is being presented as generous because it raises the threshold at which expensive car owners start paying extra tax. But notice the crucial qualifier for zero-emission vehicles only. If you are aboard an expensive petrol or diesel vehicle, you get no such relief. This is a government using the tax system to actively punish people who have not switched to electric, creating a two-tier system where electric vehicle owners get preferential treatment while everyone else pays more. When announcing the change, Chancellor Rachel Reeves said she was providing support to boost our British car industry, which is a kind of political spin that sounds positive but does not survive contact with reality. How exactly does raising taxes on millions of motorists boost the British car industry? The logic seems to be that by making it more expensive to own petrol and diesel vehicles, you encourage people to buy electric vehicles, and some of those might be manufactured in Britain. But that is an incredibly indirect and uncertain route to supporting the British car industry. A more honest description would be we are raising taxes on most drivers to subsidize electric vehicle owners in the hope this speeds up the transition to zero emissions. Reeves noted that the VED changes would save more than 1 million motorists £440 a year, which sounds like a huge win until you ask the obvious follow-up question: how many motorists will be paying more, and how much more will they pay? If 1 million drivers save £440, but 2 million drivers pay an extra £500, the net effect is actually a tax increase disguised as a tax cut. The government is very good at highlighting the people who benefit while quietly glossing over the larger number of people who will be worse off. She also announced £1.5 billion in funding for the EV industry, which is taxpayer money being used to subsidize an industry that is already benefiting from preferential tax treatment. So not only are petrol and diesel drivers paying higher VED, but their tax pounds are being used to fund the electric vehicle industry that they are being punished for not buying from. Chancellor Rachel Reeves also confirmed that the government would make changes to employee car ownership schemes, which are arrangements where employees can get cars through their employer with certain tax advantages. Speaking during last year's budget, the Chancellor said these schemes will be brought into the scope of benefit-in-kind rules from April 6, 2026. This would have represented a significant tax increase for anyone using these schemes, essentially making company cars more expensive from a tax perspective. However, in a rare moment of listening to feedback, the government announced it will delay the implementation until April 6, 2030, and transitional arrangements until April 2032. That delay is welcome and suggests the government realized the original timeline was unworkable or politically toxic. But the fact that the policy is still coming, just later, means anyone using these schemes needs to start planning now for significantly higher costs in a few years. Similarly, a temporary benefit-in-kind easement for plug-in hybrids has been introduced to prevent tax charges increasing significantly as a result of new emission standards. The easement will be in place from January 1, 2025, until April 5, 2028. This is a government recognizing that if they hit plug-in hybrid drivers with the full force of new emissions-based taxation immediately, it would cause a political backlash and might discourage people from buying hybrids as a transitional technology between petrol and full electric. So they are phasing in the pain over several years rather than delivering it all at once. But make no mistake, the pain is still coming. If you own a plug-in hybrid, your tax bill is going up significantly after April 2028. So you need to factor that into your long-term motoring costs. Drivers of HGVs, the heavy goods vehicles that keep Britain's economy moving by transporting goods across the country, will also see the VED rate operated in line with inflation, in the same move as cars, vans, and motorcycles. This might sound like a relatively minor change, but it has significant knock-on effects because haulage companies operate on tight margins. If their vehicle taxes go up, they will pass those costs on to their customers, which means the shops and businesses that rely on haulage will pay more, and they will pass those costs on to consumers through higher prices. So even if you do not own an HGV yourself, you will still end up paying for this tax increase indirectly through higher prices for goods and services. The government also stated that it would uprate the heavy goods vehicle levy in line with inflation from the start of the new financial year. This is a separate charge on HGVs based on their weight and how much they use British roads, and it is another cost that haulage companies will pass on to consumers. The cumulative effect of VED increases and levy increases means that transporting goods around Britain is becoming significantly more expensive, which feeds into general inflation and makes everything more costly for ordinary people. The broader political and economic context of these tax changes is crucial to understanding why they are happening now. Rachel Reeves is committed to not raising income tax, national insurance, or VAT in accordance with Labour's manifesto promises. But the government still needs to raise revenue to fund public services and reduce borrowing. So instead of raising the big headline taxes that everyone pays and that are politically very visible, she is going after motorists through vehicle excise duty, fuel duty, and various other charges that affect specific groups and are slightly less politically visible. It is a classic strategy of raising revenue through taxes that people do not immediately notice or that affect minorities who can be politically isolated. The problem with this strategy is that millions of people drive cars, and they absolutely will notice when their VED bills go up or when they start getting charged per mile for driving their electric vehicles. These are not obscure technical taxes that only affect wealthy individuals or corporations. These are charges that will hit working families, small business owners, and anyone who relies on a vehicle for their livelihood. The political backlash could be substantial, particularly if people feel they were misled about the true cost of the transition to electric vehicles, or they conclude that Labour promised not to raise taxes but then went after motorists because they thought they could get away with it.